Welcome back to Krown's Kitchen Cave as we get started for another Friday morning over here from a bright and sunny Helsinki, Finland once again. Turned back on the summer button. Anyways, plenty to talk about today because we are going to be seeing the CMEs close for the weekly. Also, it is technically a holiday today for U.S. major markets, so likely going to be a more or less a quiet day for the world markets. However, we have seen in the past that when U.S. markets are on holiday, or any market is on holiday for that matter, or a world holiday, whatever you want to call it, Bitcoin typically does get to do a little bit of its own thing. So I would keep an intentful eye, especially on CMEs and the way that they close today's daily and weekly. And with yesterday's rejection at 9,300, once again, we actually do have some very interesting things to be following up on the shorter term timeframes, which I want to spend a lot of time talking about because in this sort of environment right now, it's one of those environments that, you know, if you're just trading spot, it fucking sucks. It fucking sucks. So I want to talk a little bit about sort of what I've been doing these sorts of ranges. And with all of that said, I feel like I'm missing something. Yes, I am missing something. All programs are on sale for the next 16 days for an early or midsummer, I guess, sale for all the world out there. If you're American, think of it as a 4th of July sale, as we are one day away, I believe. Yeah, today's July 3rd. All right, according to my computer, which seems like it's right. Looking all good over there. Anyways, as always, with these programs, definitely watch the videos accompanying them to find out if it's relevant to you or not. But, and I'll go in detail on like what the actual content is within those programs in those videos. But on this particular video right here, without getting too lengthy, I do want to make sure that always my biggest consideration, the one that I really want to hammer in for anyone who is thinking about these programs, is make sure that you have enough time. If you don't have enough time, you're not going to make the most out of it, and it's not a good idea to get involved with it to begin with. And also keep in mind that these programs, you know, usually what I've noticed from start to finish for the people who do have success with it, it takes them about on the very fast end 6 months. There have been some people who do that, but that's not normal. I'd say more around a year to a year and a half for the guys who really hammer it and you know, stick in there. And it's pretty fucking cool to see. But I always want to make sure that that's kind of understood. And then yes, watch the videos to find out if they're relevant to you. It might be that, you know, you're not really going to find them valuable. It might be that they are exactly what you're looking for. That's for you to decide. You're an adult, and I trust that you can make that sort of a decision. Although there are some kids, and while I haven't put an age limit on it, I've thought about it in the past actually. Also, all the indicator subscriptions are on sale too. For the we have a new 3-month Jewel package, which essentially is a sale for the Jewel. And then if you still want to do monthly, you can do that as well. And then also the Pro there as well. Again, watch the videos to find out. However, I would say with the Jewel, kind of like another tidbit for that is if you're not a successful trader on your own, doing what you're doing right now, meaning you in some way lack one of like the 3 pillars of trading, which is risk management, position management, and entry. This is not a magic pill for you. It's not going to teach you risk management. Yes, it's a very powerful tool. Yes, it can, you know, dig you out of some pretty nasty situations. But at the end of the day, if you don't know your risk management or position management, even for that matter as well, then it's only just a matter of time before it does not work. Anyways, also new one as well, the PineScript Mastery Program. That is from Mournfall himself, the actual designer of this platform, the Krown trading application, and he will teach you, if you so desire, how to make your own indicators from start to finish on PineScript, which is native to the TradingView platform. Anyways, enough shilling for myself today, and back onto this over here on the Krown trading application, which, by the way, I believe that there's another update being pushed later today, or maybe over this weekend. I'm not exactly sure on that one. We do see that the open interest has actually been rising again, so this does kind of help well round out the analysis as far as giving a little bit more of a bias boner once again. And as we see open interest kind of rise up from yesterday to today, going up from a little bit below that 1.8 billion and a half marker to where we are right now, about 100 million being added as Bitcoin price action does come down. And more importantly, this Bitcoin's price action is coming down while also rejecting from the last very short-term resistance, which is kind of weak. And also on top of that, we're seeing essentially structure being, well, I wouldn't say broken, but having continuation from the daily trend, which is down right now. And I think that the CME's chart is really going to be interesting with regard to that. Holy shit, man. It's fucking kitchen time right now, baby. Smash those spoons and poke out your fucking eyes with a, I don't know, what do you want to do with a fork? A plastic one. Elsa says, "Go fuck yourself." Thanks, baby. All right, so back onto this, and I'm gonna be over here fucking myself. Looking at CME chart, we do see yet again another confirmed rejection on the 10 simple and 21 exponential moving average right here, which I think that this chart is just easier to read overall. You can see that the daily is in the process of maintaining the downtrend. High right here, lower high right here, third lower high right here. You can call this all kind of one low, although some people would make an argument that it's two lows. I'd say it's just one. But then you have continuation with another one right on over here. So more importantly, you know, right now it does seem like, especially with a weekend approaching, a holiday weekend approaching nonetheless, where, you know, Bitcoin isn't really going to be able to get the direction from traditional markets, which is still looking strong. We'll actually look at it in a second here. But you know, I do think that if bears are going to, you know, make a little bit of an attempt, they're going to have a chance certainly this weekend. Momentum also is turning down at the same time as well. Daily Stokes going to be coming down as long as price action is below 91.90 on CME. So keep in mind that that's essentially even below this potential lower high right here. Now, do we have continuation below this lower high right here just yet? No, we do not. So how would we get continuation? Let's take out the low side of this, essentially constituting it. Especially if it closes below the wick of this at 89.50 on CMEs, then yes, that would be continuation, and that would be very, 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 very good indication that we are going to be continuing this downtrend. At the very least to the low 8,000s, with stops along the way, of course. You know, there's going to be bounces and whatnot, but overall, you know, it's the same thing that really I've been saying for the last like month now, actually. And this is not to say that like the historical volatility percentile read is inaccurate or not working. It's actually working very well. But what it suggests is that the longer that Bitcoin spends in this sort of low volatile environment, the more and more nasty this breakout or breakdown is going to be. I mean, keep in mind over here a couple things. First and foremost, the open interest is almost near 2 billion, which is a nice round number. But it's also a little bit of a problem because we don't really have good historical, or we don't have enough historical data to really reference this or cross-reference this up with price action. But it's going to be very enlightening to the new interpretation from this, or just an interpretation from this when we actually do see this pop back up, because we are at extremes here, and we've been at extremes for, you know, more than a week now, a week and a half, 2 weeks, which is again, you know, implying that this is going to be an absolutely catastrophic or incredible move as far as percentage goes. I mean, we're talking multi-thousands of dollars, and realistically, you know, if it does come to the upside, we're looking at potentially even a macro reversal to the downside. Same thing could apply, but still, you know, 30 to 50% move, I think is, I mean, that's a pretty big range, but 30 to 50% move is within the cards, I do think. So anyways, as far as Jewel goes, Jewel's still kind of given pressure down here, given the sell signal right here, given continuation, halt your shorts right here, and actually working its way back down below the fib. That's what I forgot. Morinfall also has his channel over here. You can actually see it right here, the weekly Jewel video, where he'll actually go over the signals and explain it out. For the people in the actual Jewel, keep in mind that you're going to be prioritizing those videos. So definitely make use of it, because it's the actual guy who actually made it. He uses it differently than me. He's a lot more aggressive with it. I'm not. I'm not at all. But he does have a lot to say, and I do find it quite valuable. It certainly helped me. Anyways, looking through it, I'm curious what the 12 hours printing right now. 12-hour Stokes are popping back up, so they're technically up right now. But as you can see right here, the 12-hour is continuation. The 12-hour is lower high confirmed, and working its way further south. The thing is, though, is that if we do close this 12-hour dildo above below 90.50, then I would look for immediate continuation back to the lows of 25th of May, somewhere around 8,700-ish region, or 8,750 on CMEs. But that's not going to be the same thing as spot. I think spot's more like around 8,700 actually, you know, a little bit lower than that. CME is about 87.50. This one's showing about 8,700 even. So yes, that would be, and again, I just think that this is an easier chart to read. So any sort of a 12-hour total closure below there, very likely we will see that next level popped. It's also the 200 exponential moving average on the 4-hour, on the 12-hour as well. If we go down to the 4-hour, could we use the same sort of triggers for this? Yes, actually, I do think that using this area right here is completely fine. This area being this little, very small liquid zone based off the 4-hour from about 90.40 to 90.50-ish region. 4-hour closure below there, and I'm looking for continuation. And yes, the 4-hour trend is obviously down as well, confirming that last little local high. And what's also interesting about CMEs here is that we do have the same 4-hour death cross incoming, which, getting that rejection yesterday above there really does add on to the likelihood that this is going to play out in the way that you typically see them play out. All major moving averages on this one have a negative slope except for the 377. So the second that we do break that, it will very likely lead up to another, from this perspective, well, like $300, $400 move. Yeah, $300 move. However, it will inevitably death cross right here as long as CMEs stay below, especially 92.50-ish region. So it's not too far away, about $100 away, a little bit more than $100 away. But as long as it's below there, it will inevitably cross. And I would say definitely today it will get confirmed if we do end the day below there. So that'll also be a good bias boner grantor, if you want to call it that. At least for myself, of course, this is not financial advice, so I'm not a financial advisor, but that would be a good lead-in for the next downside move. 4-hour golden cross and death cross actually has been pretty damn good on CMEs, even though it hasn't had as much history as we do see on spot price action. So we can, but we can look at this a little bit more. Looking at the last bullish cross right here, beautiful move all the way from 7,700 to 14,000, or sorry, 10,500. Time before that, we get the death cross right here. Again, not actually getting you the best timing of this, but the rejection along the 200 exponential moving average is the play, and that is how I do play these things, and it's actually how the way that I'm playing it on spot price action as well. As long as we're below the 200 at that point, I do play it as a trend in progress. And as you can see right here, not always going to have this good of results, but from last high to next low, that's a 54% move. This one, by contrast, to the upside, probably like almost a 40% move to the upside, pretty damn good. This one over here, giving you a very lovely move as well, about 27.5% before reversing back up. And this one over here actually did take it. There was one folly right here, of course. It's not going to be perfect. Nothing's fucking perfect. But after that, this next signal was phenomenal. Yes, it did give a little bit of a stint above the 200 exponential moving average, but that's why I kind of use that as a basis point. So I kind of have to dance in and outside of a trade like that. Gives you all the way from 3,700 all the way to 14,000. That's going to be a bit of an outlier to the upside, and kept you bearish all the way through essentially September 2018 to the lows of 3,100. And again, a few bad signals here. I'd say that this one didn't work out all that well. This one over here actually did give you a little bit to the upside before turning back down 3.33%, but not really what you're looking for. This guy over here, phenomenal, 35.25%. And other than that, we don't really have enough history to really be going off of. But we can, look at the same thing on spot price action as well. And it's more or less the same results, although a little bit more floaty, especially in this segment over here. But, because it is more floaty, it's less dependable. And if it's less dependable, then it essentially means, if it does get the death cross, it's worth paying attention to. But it's really not until CMEs do it as well, where it's like, okay, this has some mustard on it, if you want to say that. And what do we know right here? We've already gotten it, and more importantly, what happened yesterday? The significance of yesterday was we rejected from the blue box, which was also, well, let's go to the actual blue box. Yeah, this blue box right here, which was also the 200 exponential moving average. And as long as we're below there, I'm looking for continuation essentially. Doesn't mean that Bitcoin can't pop back above, and if it does, then it's the same shit as yesterday. But remember that this is only the short term area right here. If Bitcoin does pop back above 9,300 and close a 2-hour or 4-hour dildo, I would look for the same thing as yesterday. I'd look for extension of 9,500, or even a little bit more than that, like 9,550. Very tight ranges here. I don't really prefer to trade that, and if I am going to do it, I'm going to do it with options. And then the same thing, going from range to range here at about 9,550 all the way up to 9,900, 10,000, which I do think that Bitcoin would look a lot more healthy if if it could do that. But still, just like the downside, the upside is it's hard to trade for, like the big upside, as long as you're below 9,900 to 10,000. Whereas the downside, it's been slowly kind of eroding making my boner bias a little bit more strong over time. As it kind of broke down this past weekend below that 9,300-ish region. But still, as long as it's below here, it's absolutely under pressure, and I do kind of angle my own trading behaviors towards that way. But putting in time, man, and the more time that it does put in time without really breaking down and shattering in the way that you'd expect it to, if it actually is going to really have a massive tumble, does suggest that you can see fake outs over time. So it's more of a ticking time bomb, and as I've been saying, the ball is in the bear's court to really take advantage of this sooner rather than later. Speaking of the weekly close, as we are going to be seeing CME's close for the weekly today, let's go check out what things are looking like right now. Not the easiest chart to read on the weekly. Obviously, if it does close above the 10 simple, I would be looking for a move back up to the top side of the range at 9,900, 10,000 coming into next week. That's the only obvious thing that I can really, figure from here. If it closes the way that it is right now as a doji dildo, I don't think that that's very helpful for giving me a bias as far as just formations go. Obviously, a close below about 8,800 on CMEs would be very, 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 very good, setting up for a nice move to the downside, at least low 8,000s, 8,100, probably even 7,500 after that. But looking at momentum oscillators, I keep on coming back to this, and actually that reminds me, I forgot to start with what I really wanted to focus on today. So we'll get to that in just a second. But looking at the weekly right here, and I'm actually going back to Stamp here just to get more price action history. Anytime that we do see weekly Stokes get above the critical zone and turn down, it usually is pretty catastrophic for Bitcoin price action, even in very nice uptrends. So, for example, the last time that we saw this happen was over here, which was on the $14,000 high. I mean, getting ready for, well, this 50% pullback, time before that was basically 20,000 going all the way down, 70% move almost in just a few weeks. Or a couple months there, and then all of these major highs that we see along that last bull market right here, 38.25. Measuring this one out as well, 41%, 40% right here, 36% right there. You get where I'm going with this. You've probably seen me do this a million fucking times by now. 41% right there. So it does make me a little bit more geared towards the downside, and also because all time frames up to I believe a 2-day are technically in downtrends as well, except for maybe the super low time frames, like a 5-minute or some shit like that. But let's now go over to what I really meant to begin this this video with. Okay, so I want to go back to this chart right here, and these are kind of like my secondary tools. I don't really use them all that often, but I do like to keep tabs on a day-to-day basis. And there's something interesting here with the MACD histogram. The MACD histogram, all right, let's go to do we want to be on a daily? Yeah, we want to be on a daily. The MACD histogram is, or was it a weekly? Hold on. Yeah, the MACD histogram on the weekly is very interesting as well. We are seeing a hidden bearish divergence between this point and this point, and I'm talking about the high that Bitcoin put in at about 10,000 or a little bit above 10,000 in the more recent one. And the second that we confirm and fully confirm a local high right here, meaning that Bitcoin closes or even really just trades below 8,700 on a weekly basis, I would look for an immediate move. Immediate is relative, of course, down to this 20 simple, the median band on the Trollingers right here, which guess where it is? It's right around that 8150-ish pivot, which is the same sort of, in line with some of the downside targets that we've been looking at. If Bitcoin does break to the downside, which, hey, take that off, and let's go back here. You know, which is very much in line with these, with these downside areas. For one, of course, if Bitcoin were to break to the downside, and now I'm kind of denoting that with continuation below essentially yesterday's low, or especially, you know, a full hour or even a 12-hour or daily closure below 8,900, all pretty much imply the same thing. Next, you know, next level 8,700, probably a small bounce there, but I don't think that we stop there. I do think that Bitcoin would head down to 8,550-ish base right here, try another small anemic bounce. Who knows how high it gets, but as long as it's below essentially 9,000, it's, you know, it's just continuation. And realistically, I'm looking for the 382 to get hit at the very least at 8,150, which is in line with that area that we just spoke about. Although it is worth mentioning that still the measure move from this formation breaking down, because you know, if you're looking at this as a potential Wyckoff distribution, which I do think that it is shaping up to be, the first markdown level would actually technically be the 0.5 at 7,500-ish region. Well, I do think that that area could reverse things. You know, I do think that things would likely head a little bit lower than that, maybe a slightly below 7,000, and then I want to come back and see it in real time. Anyways, going back to this chart over here, you know, and of course, this is like very long-term, far away analysis, not happening today or tomorrow, or at least unlikely, I should say. Also looking at Stochastic RSI on the weekly, same sort of thing here as well. It's just stochastic on the RSI. But anytime that we see it come back down below the critical zone, that's actually where we do see the momentum, you know, turn back down again as far as the higher term timeframes go. This one calling the move sorry, and this is also coupled up with the fact that it broke the median Trollinger band here too. So you can see it happens right here. Boom, and on a closing basis about 37.5%, and you'll probably, you know, notice that number comes up quite frequently. You know, those mid 30% moves that we've been looking at, you know, based off of multiple tools. Another example right here. Again, it spends some time, notice that all of these deals represent 1 week of price action. So it does spend a lot of time, but that is a 44% move over the next couple months. Works to the upside as well, coming off of this base right here. But we're focusing on downside right now. Now it's just more relevant to what we're talking about. This example right here on the $20,000 high, there's your 70% pullback, and go fuck yourself. Another example right here coming back down below that critical level, and 30% move to the downside. And if we go, we already measured out these moves, giving you the same moves, of course. But it's good to confirm on both, because when you do put a stochastic on the RSI, well, it's going to give you, it's basically putting a momentum oscillator on a momentum oscillator, but, on a momentum oscillator that essentially relates to, more higher term time frame trends, which I think does further enhance the signal, plus the hidden bearish divergence on weekly MACD here. And keep in mind that the same sort of signal that we were looking at on the daily MACD, actually, I think it was maybe earlier this week, or was it last week, is still something that I'm putting some weight on as well, seeing as the downtrend in the daily is getting underway. I mean, that is my read on the daily. It's a 2-day that's still in an uptrend, I believe, but it is damn close to very, 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 very damn close to fucking that one up if it goes anywhere below 8,700. So anyways, what was I referring to? It was the daily MACD. And anytime that we see the signals go below the 0 read right here, or above for that matter, and kind of maintain above there for a closure or two, alongside histogram following through, we do see price action, operate off of major pivots. Does it work perfectly every fucking time? No, it doesn't. But if I was paying attention to this, it would have said it would have said get long over here at about 6,900, which I waited probably another $500 to really start to angle my trading PP in that direction as well. But this gives you the moves and gives you the long-term momentum shifts, and that's a 48% move to the upside. Likewise, the last signal that we got to the downside was right here, right? Comes below the signal line, gives another small anemic bounce, which is actually very similar to what we're doing right now. It comes below the signal line right here, comes below the signal line right here, small bouncy bounce, although this one, bigger numbers here, probably a bounce of actually 12%, pretty damn good. But of course that gets sold into, and then you get your nice 46% downside move. Going back a little bit further than that, we can find a few more examples here, obviously to the upside coming out of this $7,300 base. This one was pretty nice one to the upside, 43%. Before that, we did have this little move right here coming down from what was that, like mid eights down to mid sixes, 26% move. And it did keep you short most of the way through that last major consolidation when Bitcoin was above 14,000 about a year ago. In fact, yeah, actually would have done a little bit better than some of my other tools in that regard. So credit due to the MACD's nuts for that one. Other than that, though, more or less saying the same things that we're kind of using with other tools. So, it's interesting to look at, of course. But at the end of the day, then you just kind of then you just kind of like, end up repeating the same shit. And it's like, do you really need to call out every fucking different tool saying the same fucking thing? No, that's why you use, that's why I typically use the tools that I do use, because they cast like a nice wide net to kind of see what those more similar tools would tell you anyways. Okay, cool. So I have completely forgotten to talk about traditional markets as of yet. And here's the thing. I'm very hesitant to get if traditional markets were trading today, which they're not. Well, futures will trade for a little bit of time, but they will close likely early, I think. Is this chart bullish? Yeah, fucking obviously it's bullish on NASDAQ. Do I think that it could have some downside here, come back down and fill yesterday's low? Yeah, absolutely, and that would be an opportunity. Looking at E-mini futures for SPY, same thing. It closed above this nice little liquid zone, the same one that we were looking at yesterday. And yeah, backing off of the next sort of short-term target here that we had marked off, but overall, I do think that this one is in the process of moving higher up next week, very likely back up into the 320s, mid 320s, very likely. Looking at the weekly, very, 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 very good structure here. That is your next higher low as far as weekly goes, right around the 21 exponential moving average on the weekly at it, just a little bit below $3,000. So coming into next week, I'd be looking for it to pop back up to the mid to low 320s, and then probably give a try up to this gap over here, somewhere right around 330-ish region, 334 it looks like. And in overall, looks still good to me. I don't see any real reason to be looking for like a massive reversal, especially now that it has set in yet again another higher low, or presumably so. I mean, it does have a little bit of trading to go today, but I would not expect it to fall down $3,000 essentially. So as long as it maintains that, direction's up, man. Direction's up. Weekly Stokes are just getting in the critical zone. I mean, that's fine. Weekly RSI is not really telling us too much. It's kind of an immature signal right there. Looking at the daily, again, just kind of clearing that last liquid zone. This is looking like, well, it's looking like higher lows. It's looking like the golden cross getting respected. I mean, look at how it crosses right there. Bounce one, bounce two, higher low, and continuation as far as this trend goes, as all major moving averages have a positive slope and price action actually healthily above. So to me, that's a very bullish read coming into next week. But I wouldn't really expect too much today. So am I like, how does that kind of fit into the picture of Bitcoin if they are correlated, so to speak? Well, they're correlated on the macro direction. So if macro direction for, major bourses of the traditional markets is essentially up, then I think that does bode more or less well for Bitcoin long term. But, during a holiday weekend, could we see maybe Bitcoin play out some downside and do its own thing for a little bit of time? Yeah, I do think so. And for the people who are going to say Krown, but you say that you never look for big moves over the weekend. No, that's not what I say at all. What I don't look for over the weekend is big reversals, contrary to the week's direction. The week's direction has been down. So if Bitcoin does move to the downside here, that's par for the course. We've seen that before. We've seen big moves before. I'll show you one right here. On CMEs, there was a phenomenal gap up that we saw twice, or actually a few times, almost a year ago, May 2019 right here. You'll probably remember this one. This happened over the weekend. Bitcoin just absolutely fucking skyrocketed. And then another one right here, and then another one right here. All phenomenal moves. But it was continuation of trend, as you can see. The trend was to the upside. There's no change of behavior there, whereas over here the change of behavior would be to go to the upside from this time perspective, and this also offers up a very easy edge as well. Just using the high that we saw on 30th of June at 39.90 on CMEs, that's going to be a damn good continuation point now for reverting short-term and medium-term bias bonus back up to the upside. At least back up to like 9,700-ish region, whatever this prior high is right here. actually 9,800. So that'd look good. But for right now, as long as it's below, I play it as another lower high. I mean, it offers up an edge, and you can place a trade. You can place a trade on both sides of that, going both ways. And I would say that it's equally right, assuming that you do have your risk management. But that's the purpose of that point right there, is that it offers up a very natural risk management point. So naturally, it just makes things a lot easier. It's documentable, and if the risk is okay, then all good. But that's a personal thing, of course, as well. So that's why you can't really like give signals, because everyone's gonna have different trading personalities anyways. That's the one big thing that I've never really understood about signals programs, or not signals programs, but like signals groups. It's like, are you gonna be up at every fucking hour of the day just like me to do exactly what I'm gonna do? It's like, all right, okay. Keep in mind, I live in Finland as well. Anyways, when you really start to think about the minutia of it, it's like, man, that would be a very difficult thing to do successfully. Okay, cool. Because people have their natural proclivities. All right. I didn't even look at momentum oscillators on spot price action. Let's go check them out. Looking at daily right here. Daily stocks are technically up right now. But let's see, what would it take to cross them back down to the downside? Any sort of a daily closure, basically where we are right now, below where we are right now at about 90, 80-ish region. If that does happen, I'd look for, at the very least, another swipe of that 89.50-ish, cyan 89 exponential moving average right here. But continuation below yesterday's low, essentially at 89.39. Not super scientific on that one. I'd actually like to see a daily closure below 9,000 to denote continuation, or a 12-hour or a 4-hour closure below about 89.30-ish region to denote continuation as well. It's just I always get cold feet looking at these lower term timeframes over the weekend. I don't really like to say anything aggressive. Holy shit, man! Historic volatility percentile is just. This is unseen from before, actually. Going all the way back to June 11th now. So that is 3 weeks. Is that 3 weeks? That's 3 fucking weeks. Oh my God. Yeah, we've actually never seen that before. Pretty fucking crazy. Okay, cool. So just using those continuation points, or actually before we do that, let's go down to the lower term timeframes momentum. 4 hours showing momentum remains to the downside as long as below 91.50-ish region. Not looking good there. 3 hours showing momentum to the downside as long as we're below 91.20. That's kind of like your last little continuation lower high right there as well. So interesting how that works out. 2 hours showing 90.50, same sort of thing, but to the downside. Hourly showing 90.50, and again, same thing, coming out of this potential lower high right here as well. So how does that relate to the 12-hour? I'm always curious. 12 hours showing 9,000. So yeah, I do think that 9,000 probably gets it as well. Although, man, if it closed right at 9,000, on a fucking weekend, it's like, Jesus Christ, man. It probably does work out, but I don't think I'd trade it myself. I just really don't like doing that. 2-day trend still remains to the upside, to be fair, but we do have potential lower high in place. And if Bitcoin does close any sort of a 2-day doodle below the 200 simple at 88.50, not good, man, not good. I mean, any sort of a close below the 200 simple likely going to be the next big thing, telling you that the phase is shifting, at least for the higher term timeframes. And next relevant target is going to be in the low 8,000s, which is kind of where I'm leaning towards right now. I guess I still remain overall bearish. If Bitcoin is going to flip around bullish here, I'd expect it to go sideways, like slightly above 9,000 for the next couple, 2-3 weeks aimlessly, and just really absolutely bore the complete shit out of people, and then maybe flip back around. But I think that if bears take control, it happens like sooner. It's gonna happen sooner rather than later. I keep on looking at the volume signature here, lined up with the historical volatility percentile. It's very, 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 very mature. Although I would even go as far as saying that it's so mature that it's almost at the point where it's like, okay, you'd expect a break on this one by this time. So is this actually even the right read to begin with? And I still think that it is, but it is running out probably within like the next week and a half. Okay, let's go look at probabilities. Well, first let's also define the ranges. So I'm gonna go, man. trying to figure out which one's going to be the best one to do this on. We'll use a daily here. I still think that 9,000 is the best, most relevant point to this for the downside. For the upside, it depends, you know, exactly what sort of upside you're talking about. Above 30th of June's high at about 9,300. Yes, I do think that we'll have another move back up to the 95.50ish region, tap into that liquid zone, but that only correlates with a short-term range. But we can use that right now because both of those are continuation points. Or sorry, 9,000 is not a continuation point. That is a closure point. Continuation point to the downside would be more so like 89.30. Which we can look at as well, but I just want to see the probabilities for this one in mind. Now, hold on. First thing, before we even get into that, the rings on this are taking a very nasty negative slope. If bear is going to take control, it extremely likely happens like today or tomorrow. I really dislike saying aggressive things like that, but this is a hard signal to ignore. From a probability standpoint, to put this in perspective, I mean, this is very, very high right here. 37.25% chance to probability close to the downside. And that correlates with, you know, a bigger move overall. Because if we do break this one to the downside, which I would even argue that it's already broken to the downside based off of last week's closure. I mean, you know, you could chart it just like this. And this is completely right. You could chart it like this. If you were looking at that, and if you are playing this as a formation, that would have been the read. Yes. And rejection comes right at where? At the retest. I mean, that's classic shit. Problem is that when it lingers around a little bit too much, which it kind of is, then I start to doubt it. But again, you know, very, very documentable risk management point there. Anyways, going back into it right here, you know, 37.25% to the downside is pretty damn big. And remember, you know, I would almost immediately target a move down to about 8,700-ish region, probably a small bounce there, and then continuation down to wherever this low is right here, like 85.50, probably another small bounce there. But realistically, I'm looking to the 81.50 before like the next decently good bounce. You know, like maybe a few $100 bounce. Maybe it's even reversible as well, you know, but it would have to have a change of behavior back up to the upside, just like well, you always look for, I suppose. Now let's take this a step further though. I'm going to use 9,500 correlating with now the medium term time frame. Remember, you know, getting back above 9,500 is not like it's not like it's all fucking sunshine and rainbows and butterflies and shit. It would just imply a move back up to the top side liquid zone, 9,900 to 10,000-ish region again. Does not imply a breakout to the upside. Although at that point, you know, you really have to be looking at this as, okay, you know, Bitcoin's just failing to fucking break down here. Can still put in time, but, you know, have to be a trader at the same time as well. Otherwise, you get taught the same lesson again. I'll tell you that right now. That's from experience. You know, anytime that I think that I've outgrown, you know, my classic trading plan, I get humbled to know that it's not. No, I haven't. Anyways, to the downside, you know, what other point do we want to use? Maybe we could use a wick low right there and just kind of eke it out a little bit more. I'll use 8,900. Just give to give it a bigger range, 25% to the downside below 8,900. And that is a continuation point. That's looking rather likely. To the upside below 9%, which isn't so bad, but it's definitely not good. And if we do put this on future bars, I expect to see that this still maintains a downside curve. Yes, it does. It does. It does. It does. Wow. Great English, Krown. So yeah, overall, still kind of looking for this to shuffle its way onto the downside. If Bitcoin can just hold in here for maybe another couple weeks without breaking down below those levels, then, you know, maybe it does flip back around. But I suppose my bias boner remains flaccid, sirs. Remains flaccid, sirs. And this video is already 37 minutes too long. Sorry about that. Apologies. But I would like to wish you the best and the happiest on this nice little Friday. You know, it's been an absolute pleasure. I am I'm searching for my words because I didn't get the best night of sleep last night, but you know, it's always good to be here with the crypto nerds or the TA nerds, better said, as we're one and the same, my friend. We're one and the fucking same. Who else listens to a 35-minute long video on an asset that's barely moving right now? Well, welcome to the club. Anyways, take care, and until next time.